Good day all. Ira Epstein with your metals market wrap-up, and we are now on Monday, the 2nd of March, 2020, just after 1:55 in the afternoon. We're close to where the settlement prices were. Remember, they're determined at 12:30 p.m., but these markets will trade Chicago time until 4 p.m. Very difficult to try to catch any of these moves. Let me explain why. Tomorrow you're going to have the G7 talk to each other, the 7 members. There might be a communique. There might be a joint action. We don't know. The market is building in that the Fed is going to cut interest rates another half point, if not more. We've got the coronavirus seeming to stabilize in China, but exploding in other parts of the world. I mean, over the weekend we saw Italian cases go from 700 to 1,400. Lufthansa has canceled flights into northern Italy. We saw the Louvre close for the first time. I don't remember that occurring. And you're going to see it's going to hit America in a large way. The tests are just making it into the mainstream. As the test results and the tests get going, we're going to hear more cases. 5 people died in Washington State as of today. These are real problematic times. That doesn't mean that I'm going to try to scare people. Here's what I think happens. G7 rally, market takes off, the governments have your back. More test results come out, that's out of the way, and now what do? Because the news coming forth is probably not going to be less cases, it's probably going to be more cases. Don't know. That's your issue. And the metals are all over the board on this news. And when I say all over the board, you're up 600 points in the copper. That's not a little bitty move. That's a monster. This market moved almost 9.5 cents today. Whoa, that's huge. When you look at the gold market, you've got just shy of a $50 move in the gold market. So the volatility is not up a little. Anyone that's trading this game knows it's large. And if you misstep in large volatility, you get hurt. Then you look at the option sides of some of these markets, and they put so much premium because going into a weekend, they don't know which way the market could explode. Well, the guys that are creating these options, remember, for every buyer, there's a seller. Got to be careful. You can get big moves and not go anywhere with them. Then I look at the energy part of it. It's got a nice bounce finally. Maybe the market at $43 US is finding a bottom, maybe in the Brent. I don't know. OPEC's meeting, you know they're not going to say that they're going to add oil. They're going to take oil off the market. How much will be the question. So it's a week where we might get those early bounces between G7 and the like. But longer term, the bad news is yet to come in. And I'm just not talking the virus. I am talking the PMIs, the productivity that's going everywhere. You've got to be very cautious. So when I'm looking at the gold market, I'm seeing a market that is able to stay over the 18-week moving average. That keeps the bias up. When I next look at the market on a daily bar chart, you've got a pretty violent swinging market. If you call that a trend, congratulations. But if you call it a trend, you better be using the word down, not up. Why? Because you've got a pattern of lower highs and lower lows. That's the definition of a downtrend. All the market did over the past 3 days is come down and challenge this 18-day average of closes from an uptrend that was broken right here. You still were in your uptrend. It's when you took out that's what hurt it, and all you've done is pulled back to check it. The settlement today looks like it's going to be under that number, so I've got the swing line down. Looks like the bias is going to be down. The lower Bollinger Band, if you look at that for potential support, is right by the 100-week average at 1533. That's a $60 break. No, I'm not saying it has to go there. Frankly, as a chartist, I'm thinking the market wants to hang in this general zone right now because it's got parts for it, parts against it at this point. But let me sum this up for you. At this point, trend down, bias down, momentum down. Got it? You got all 3 of those elements down. Where would your stop have to be on this trade to break this pattern? 1662.5. You realize that's $65 away. It's an awful big amount of risk. Then I look at gold versus silver. And admittedly, this is the March, and I probably should move these to contracts that'll match each other. But the point is, Silver is not gaining on gold. That's what I'm really showing. And you could see how it's just laying down here. Yes, it's trying to close over the lower Bollinger Band. It only stays out of the black lines 5% of the time. But I don't see anything friendly on this chart, nor is it in a trend right now. You have a higher high and a lower low pattern. I don't see anything. I see a vertical price decline, a son of a gun, where you came from the 1900 level in no time at all, in a week, down to 1640, and now the market needs to consolidate that in some manner. In the copper market, we're getting these narrow Bollinger Bands. Do you see what's going on? I'll back you up right here. You see how they're narrowing in? Then the market tested that lower band Friday, tried to hang in there, retested. Again, this was Friday. I take it back. That was Thursday. Retested, couldn't stay out of it. Third test and couldn't get anything going. And where'd you pull back to? You pulled back to that 18-day average, and you're probably going to be in that general area. Let's assume the market gets a boost from the G7 statement tomorrow. Does anybody think out there that the G7 is going to come out after their conference call and say something to hurt the markets? If you do, you're on your own. They're going to say positive things. That's why they're doing whatever they're doing. That's why they're doing a coordinated event that came out of left field. They're going to say something. They may act in unison to spur on world economies. Well, that's not something that I'd want to be overly bearish copper going into, but can it overcome the COVID-19? This problem we're having is not a financial problem. It's becoming one because of the virus, but the cause hasn't gone away in the virus. Will it go away? Of course it'll go away. I have been, I'm old enough to have seen polio, mumps, chickenpox, measles. Everything gets resolved. It's the question of how long it takes to get it resolved and what it does to the economies in the meantime, and that's why the G7 is meeting. Can financial policy help the economies in terms of stemming the damage? Yeah, but they can't cure the virus. And if that virus keeps picking up momentum, then they shot one of their bullets in their gun, and that bullet's gone, and if the market goes through whatever the lows are at that point, you got problems. In looking at the platinum, higher high, lower low, a complete vertical decline. When are the automobiles going to be built again? Where do the people go into the factories? Who's buying cars? Chinese auto sales down first couple weeks of April. I was reading the numbers. January down 90%, probably down in the 80s for the February. I haven't seen the final results, but I wouldn't be surprised. In the palladium, if platinum's down, it can only stay up so long. It's still got industrial usage. So the market down today, fighting at that 18-day average of closes, momentum down. You got a higher high, lower low, and it's finally from the all-time high giving up a little ground. It's not a reason yet to be bearish. Take out 2387.30, and you might scare enough people where the Bollinger Band can come back into play. In the dollar index, it went from being the king of the world to getting the heck beat out of it, almost 200 points. That's a lot of move in no time at all. So you came down, you were holding in on Friday. If that gives ground, then the 100-day average is the next support. Trend down, bias down, oversold, and that's what's going on right now. So you're in the midst of fighting in that battle right now as people that had bought what's going on, how fast is this happening. Really, the trend ended right here. That is when the market got under a previous low, and the settlement there was under the 18-day average of closes. If you didn't move, you don't get a second chance. These type of markets right now just move on you. That's fine. You'll have been there, done that, and remember, it's March 2nd. There's a lot of trading days left in the year. So when I put it all together, I come up with ideas, and some of those ideas are this. You take your hands, you put them in your pocket, and you wait and see what to do next. We write about this and so much more in our newsletters, and we've got a full staff here that writes a lot of letters during the day on a host of different market subjects. The idea is to tell you what's going on in the markets, who's doing what, be it options, spreading, hedging in different areas as to what we're seeing. If you're a market technician, you'll love the pivot points we put out and the other items that we talk about on it. If you ever get our charting software, which you should get, you'll hear us talking through it, because during the day we're broadcasting throughout the day. And if you miss one of those broadcasts, no problem. They're all recorded right in the charting software, so they're yours to listen to, and you can go buy them by the market group. How do you get access to all this? Well, go to our website, sign up for the free trials. You'll see that on the bottom right. You can click up here if you're watching me on YouTube. It'll take you there. Or you can always call us the old-fashioned way. We pick up the phone. We get you all set up while you're right on the phone with us. I'm Ira. You have a good day. I'll see you tomorrow.